What if I told you that every major crash in the last 100 years, every single one, shared the exact same 4 billionaire trades, and the people who made them walked away richer than ever, while everyone else watched their life savings collapse? But here's the part the world is missing. Those same 4 trades are already happening again. Right now, in 2026. Stick with me till the end, because once you recognize this pattern, you'll never see the markets or your money the same way again. Today, I'm going to show you why these same 3 trades appear before every crash, how billionaires used them in 1929, 1987, 2008, and the eerie signs appearing again right now in 2026, plus the 4th hidden trade that quietly creates generational wealth. But first, to understand the 4 trades, you need to understand the mechanics of a crash, not the headlines, not the hype, but the repeatable sequence that has played out for a century. Let's begin. The recognition. Nobody wants to face crashes are not unpredictable. They're mechanical. They follow a sequence. And the smart money always makes the same moves when they see these 5 stages forming. Extreme valuation, excessive leverage, a trigger, forced liquidation, and a panic. Sounds familiar? It should, because we're sitting in that exact setup right now. But to see why the 3 trades matter so much, we need to go back a century. The first trade, cash before the storm, 1929. Joseph Kennedy, one of the most aggressive speculators of the 1920s. Stocks had tripled. Everyone was borrowing on margin, and Kennedy did the one thing nobody else had the courage to do. He quietly converted everything to cash. Not in a panic. Not overnight. But systematically months before the crash. When Wall Street lost 89% of its value, Kennedy didn't lose a dime. He made $50 million. 1987, Paul Tudor Jones saw the same signals. Stretched valuations, margin debt, unstable algorithmic trading. He didn't just reduce risk, he emptied the boat. By October 1987, he was mostly in cash. 17 days later, the Dow dropped 22% in a single day. 2008, Michael Burry, John Paulson, Warren Buffett all did the same thing. They raised cash because nothing made sense anymore. 2025. Now look around. Jeff Bezos sold over $13 billion in Amazon stock. Mark Zuckerberg selling Meta shares at record pace. Jamie Dimon selling JPM stock for the first time ever. Warren Buffett sitting on $325 billion in cash, the largest corporate cash pile in history. What does that tell you? If the smartest investors in the world are cashing out, why are average people still buying the dip like it's a Black Friday sale at Target? The second trade. Gold for when currencies break. Cash protects you before the crash. But after the crash, governments print money, and that's why wealthy investors always rotate part of their cash into gold. 1929 to 1934. When Roosevelt devalued the dollar, gold holders saw a 69% overnight gain. 1987. Gold spiked 58% during the crash. 2008 gold tripled between 2007 and 2011. 2025. And now, global central banks have bought more gold in the last 3 years than at any time since 1950. Why? Because they see something regular investors don't. The next crisis won't just be a market crash, it will be a currency crisis. Even Ray Dalio, founder of the world's largest hedge fund, says gold is essential for the coming decade. And yes, we'll get to how you can adapt this move with a normal portfolio. The third trade, the profit play. This is where billionaires separate from everyone else. The first 2 trades protect wealth. The third trade builds it. 1929, Kennedy's shorts. He quietly shorted stocks, betting they'd fall, and they did huge profits. 1987, Paul Tudor Jones's legendary bet. He loaded up on put options. When the market crashed, he made $100 million in a single day. 2008, the big short. Michael Burry bought cheap credit default swaps. When the housing bubble imploded, they paid out hundreds of millions. John Paulson made $20 billion, the greatest trade in Wall Street history. 2025. And today? Take a look. Credit default swaps on commercial real estate up 300 to 500%. Institutions buying index puts, like it's early 2008. VIX calls surging. Bill Ackman positioning cautiously. The same wording he used before turning $27 million into $2.6 billion in 2020. Coincidence? Or the same playbook repeating? Let's pause for 1 second. If 3 different generations of billionaires across 3 different eras all made the same trades before crashes, why do people still say nobody can predict a crash? You can't time the day, but you can absolutely recognize the setup because it always looks the same. Now that you understand the pattern, let's zoom out and look at where we are in 2026 and what's coming next. Where we are today. Trade 1, cash, active insider, selling at levels not seen since 2007. Trade 2, gold, accelerating central banks buying more than ever. Trade 3, volatility. Emerging institutions building crash hedges. All 4 billionaire trades are already underway. History suggests we are several months before a major crash. And remember, crashes don't start with panic. They start with forced selling. Margin calls, liquidations, the domino that nobody sees coming. The U.S. market is overvalued, leveraged, fragile. Commercial real estate is breaking. Regional banks are shaky. AI speculation has created 1929-style euphoria. Now here's the part nobody talks about. The hidden 4th trade, the wealth builder. After the crash, after the panic, after the forced selling, comes the moment that creates generational wealth. Every billionaire uses the same playbook. Kennedy bought assets for pennies after 1929. Buffett injected billions into Goldman Sachs in 2008. Ackman loaded up in March 2020 and doubled almost instantly. The fourth trade is simple. Buy when everyone else is terrified. But you can only do that if you protected cash, you preserved purchasing power, you profited from volatility. That's why the four trades exist. They prepare you for the biggest opportunity of all. Now, what you can do, you don't need billions. You don't need a hedge fund, but you can follow these principles. First, raise cash. Not all in or all out. Just reduce exposure and hold dry powder. Second, preserve wealth with gold, 5 to 10% allocation. Third, buy affordable protection. Small put options, not to bet on a crash, but to insure against one. Fourth, prepare your buy list. Write the 10 companies you'd buy at a 50% discount, because during a crash, you won't have time to think. So here's the real question. Will the next crash look exactly like 1929, 1987, or 2008? Probably not. But the sequence, the buildup, the leverage, the trigger, the cascade is already forming. The billionaires have placed their bets. The four trades are active. And the only question left is, will you be a spectator or a participant? Because in the next 12 months, someone will make the biggest trade of their life. And history shows those who prepare early walk away wealthier than they ever imagined. Those who don't repeat the same century-old story. And which side of history will you be on? That's the real trade.